Welcome back to another episode. Today, we're going to take a closer look at a lot of AI news. We got TSMC that just reported their monthly numbers for the last quarter. We also have a lot of big updates into the AI industry with companies like Microsoft, like Nvidia. Not only that, we're also getting some updates about the demand of AI GPUs that is creating a lot of excitement for companies like NBIS, CRWV, and the list goes on and on. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first I want to start off with just the big semiconductor news, right? TSMC today reported their monthly numbers for September, and this ends now that we have every month for this quarter, we can kind of see how this company is going to do in forms of revenue. Now, the stock is down roughly 1.5% on the day, but year to date, the stock is demolishing, up nearly 49%. And in the past month alone, the stock is up nearly 20%. So while the numbers were great, and we can see here monthly revenues were up about 31.4% year over year, that is massive. And year to date, from January to September of 2025 versus the same time last year, revenue is up roughly 36.4%. So TSMC continues to demolish. Now, based on what the analysts were expecting, it did beat by a bit, right? Analysts were expecting about $973 billion in Taiwanese dollars versus what they gave, which was 989, right? So a nice growth there, but it is in line with what the company reported. So I do believe the main reason the stock maybe didn't see much of a great bullish reaction is because it is in line with what the market is expecting. Now, this doesn't mean that earnings that are coming out next week, I believe already, is going to be a no event type news. We still have to hear more about guidance, about margins, about just overall capital expenditure, about how the ecosystem is going. And depending on what they provide, what kind of commentary they provide during that earnings could either create a negative or a bearish or a bullish sentiment towards the overall stock. But right now, we continue to be riding this nice AI wave. Now, the second thing I want to talk about is, let's start off with this one. So Nvidia did get a massive upgrade today by Contour. They increased their price target to $300 from $240. And they also had a message after hosting Johnson and executives in New York City that this is not a bubble and they are still in the early investment cycles. But simply, Jensen and the team are focused and competitive as ever, and they are playing to win. We do not see a scenario where Nvidia fails to secure at least 75% of the AI market over time. They also see $8 of earnings per share next year and $11 of earnings per share in 2027. Both of these estimates being 50% higher than the street consensus. That is wild, right? I mean, $8. We can see that right now, based on the current price, if they expect next year or $8 of earnings per share, that's currently about 25 forward PE ratios, probably even later. And at $300, it puts their PE ratio at 2027 at that $11 earnings per share. That is wild if these numbers are true. And I believe we are extremely bullish here for Nvidia. This is a company that can truly be the first to be the first $10 trillion company. So pretty crazy there. And I do believe this kind of gives a whole excitement for everybody, right? If Nvidia is making this much money in AI space, all these other AI ecosystems that are only a few $1 billion in market cap, even a few $100 billion in market cap, can still benefit dramatically in forms of price performance and stock price performance. Now, the second thing here, we see the CEO of Microsoft mention a first for their AI fleet, a supercomputing cluster of NVIDIA's GB300s. So they show the GB300s, which are the Blackwell Ultras. They already have plenty of Blackwell 200s. They're showcasing this new generations, featuring next generation infinite band solution. Big win, in my opinion, for Nvidia for one major thing. One of the big reasons is this is including Nvidia's networking solution, the quantum infinite band switches. Networking is becoming a massive, nice tailwind for Nvidia's revenue, and I feel like the market still overlooks it. This is Definitely bullish if one of the biggest AI cluster companies out there is buying the full stack from hardware chips to hardware networking to the software solutions as well. So I think this is very bullish for the overall market. It also does seem like Microsoft is going back on extreme spending mode, where in just the past few quarters it kind of slowed down a bit, I would say. I think things are getting heavier and heavier and heavier. Speaking about Microsoft, we have heard some recent news that kind of created a lot of excitement for the overall market today. So, based on Bloomberg, Microsoft's data center shortage to persist longer than expected. So right now, several of Microsoft's US data center regions are facing shortage of physical space or servers, internal forecast shows. New Azure cloud server subscriptions remain restricted in key server farm locations, and right now, it's pretty much the capacity limitations affected both GPU power. Just right now, there's too much demand. Server shortage is still an issue. And if you have been following this channel, if you have, this is not new news, right? They and Microsoft believed that at the beginning of the second half of this year, they were going to be back at a balance. Then the second half of this year happened, and they say, "Look, we actually don't believe it's going to happen." Now this is getting even crazier and crazier that the demand continues to outpace supply, or yes, outpace supply. So obviously, we are in a market that's very power constrained. Because we are in the power constraint market, we are seeing a lot of excitement in companies like Nebius, like CoreWeave. CoreWeave is a big position in my portfolio, like IREN. I'm excited about this, right? I am excited about this, but I'm excited because this power limitations, in my opinion, is going to last not just one quarter, not just 2 quarters. It's not going to be fixed over time. So this moment in this power capacity, GPU capacity constraint is going to remain for a while. But we do have earnings coming up, and some of these stocks running up over 100% in the past month. There could be room for heavy volatility. So if you are an investor, be prepared for either some massive pull downs during earnings. If we kind of see maybe some light touch or anything can impact this overall space. But when stocks have gone up a nice amount in the past month, just be prepared. And this is why in certain companies that I'm extremely bullish, I don't like to buy all the time. To me, companies like CoreWeave and all these are very small dollar cost averaging. There's obviously opportunities and ways to maybe kind of eliminate some of the risk. For example, someone like me who has massive amounts in the AI portfolio, what I tend to do in moments like this are the following. First, look at my portfolio and see if I have any kind of like YOLO plays and start to maybe sell them off a little bit, right? Sell off some of those or sell small call options on stocks that I think have run up. If they get executed, sure, I sell a small position. I would never use it on a big position. Let's say I had 1,000 shares. I would only sell call options on like 100 or 200, but it gives me money. It gives me some form of protection. It's a small hedge, but I still have the opportunity to grow with the rest of the position. So just, I would say at this moment, think of ways to maybe hedge a little bit, maybe think of ways to eliminate a lot of the fear. Look at your portfolio allocation. I'm not saying we're at the top. I'm just saying be prepared for the volatility. Staying here with the GPU compute, we also had this from Gavin Baker. So he seems to be a analyst that is very well followed. And he mentioned that Amazon has been raising their Blackwell pricing per hour. There was a street I couldn't find. I forget where I found it, but Amazon raising Blackwell per hour pricing. And after that, we're also seeing H200 rental prices are going up after Blackwell scale deployments are ramping up. So this is eliminating a lot of bearish thesis for Nvidia and for the AI space. First is the demand is crazy, because if the demand for AI compute, and this again, if you've been following this channel, and this is why you need to hit the thumbs up and the subscribe button. We've talked about PowerShell companies like CoreWeave for numerous months already. We've talked about all these capacity constraints for numerous months already. If you are in this channel, this is not new news to you. The market wakes up a little bit later than us, and that's okay. But what we're seeing, right? What we're seeing is H200 prices are going up. Blackwell prices are going up in forms of renting. If that's going up, happening, right? If prices are going up, it's just a supply and demand thing. There's not enough supply compared to the demand that we're seeing. And it kind of trickles back to what Microsoft said, right? Microsoft mentioned that they expect shortage to persist longer than expected. All this makes sense if you start to add all these little pieces together. We hear the power constraint. The reason this is exciting is because it continues to be that bullish trend for companies like CoreWeave, for companies like IREN, for companies like NBIS, because they have Hopper platforms. And the Hopper platforms, many say these are platforms that are going to become obsolete when the Blackwell comes out. No, we can see here that they're still in high demand. There's still high usage in AI solutions. And as more AI solutions come out, the Hopper platform is still going to be used. I've talked about it in the past. The Ampere platform is still being used. Some companies are still using Volta, right, in forms of AI infrastructure. So when a bear comes out and tells you, look, all these massive companies are expending a lot of money on debt and chips that are going to be obsolete in a year or two, just run away. They're going to make you lose money in the long term of things. But again, market is excited right now. Just be careful with the volatility. But at least the actual data, right? The actual data tells us that things are going really, really well. Now, someone here, let me just find their name. So Warren Pies, which is also a founder of a researcher firm, shared some a pretty great graph. So this is percents of minutes an hour with on-demand availability. And it talks about the A100, the H100, the H200, and the B200. And the dashed lines are the trailing 30-day moving average. And this is on multiple cloud service providers. What you want to see here is this to be going down, to actually be going down, because if it's going down, that means the availability is very, very low. It means people are just using it nonstop. And the B200s, as they're ramping up, obviously they're very high at first. You have 100% availability when you first turn it on. But in the 30-day average, you see that going down. You see all the other platforms going down as well. H100s are also decreasing. We saw at one point around 90% were available in September. Now pushing here in October, it's dropping down to 60% on the 30-day average. The actual available right now, it's even in the lower rate. Some of these are in the 10, 5%, 15% availability. AI demand continues to grow. The compute continues to grow. And this is a great indication that I'm pretty excited to see. So overall, AI market is still in full swing. I'm still bullish in a lot of these companies. I believe CoreWeave is a multi-bagger. But at the same time, the market right now in the past month or so, up about 42%. I'm not selling any CoreWeave. I'm not selling any NBIS, but I am thinking about maybe ways to hedge maybe a little bit, not the full position, maybe 5% of position, just in case we do see some downturn, because as earnings come up, volatility can get tricky. This is not the time when I'm rushing and buying these stocks. I'd rather be patient. You guys know me. I'm that patient, boring investor that I say, hey, I'm not doing anything right now. If I see opportunities during this earnings cycle, that's when I'm going to be able to jump in heavy. So I hope you guys enjoyed today's episode. Take care. Have a good day and see you all next time.